Hello everyone, welcome back to Trading Edge. So today is part 6 of price action and volume analysis series. So today we'll do a case study on JSW Steel on 15 minutes time frame. So before we start, do hit the like button and also subscribe to my channel to never miss any update. So first of all, we will analyze price bars and the subsequent volumes, and then we will add market structure and look for potential low risk high reward trade setups. Okay, so let's start. So as you can see, JSW Steel is in a very strong uptrend. See the volumes, very strong buying that is happening in JSW Steel. So we can say that demand is very strong than the supply. That's why prices are going up very aggressively, and most importantly, the pullbacks are very shallow and the volumes are also less. But from here we can see that volumes have increased. Okay, for the first time, this is very important. For the first time, volumes have increased in the retracement legs. Earlier what was happening, buyers were very dominant. See the volumes, very strong buying, and the pullbacks were very narrow, and the volumes are also very low. But now for the first time, buying is very good, yes, but for the first time we are seeing a deep retracement with increase in volume. Okay, so this is the first sign that sellers have tried to push the prices towards the downside at this price areas. But next day what happened, prices again broke this level very aggressively with good volumes. Okay, now most importantly, after this strong buying pressure with very high volumes, there are no follow through that is happening in the markets. So what is this indicating? See, we were in a very strong uptrend. Okay, and then we see a very high volume exhaustion type of candle. Why we are saying that it could be a potential exhaustion candle? Because the volumes are abnormally high, and this is happening very importantly after an established uptrend. And what we have seen before, we have seen that supply has come in the markets for the first time in this uptrend. Earlier the selling was very weak, but here we saw first time in this uptrend a deep retracement with increase in volume. Then we see this kind of buying that is happening with huge volumes. So this could be a sign of potential exhaustion move in the markets. Okay, then after this strong buying, if this buying was extremely strong, if these buyers were extremely strong, then after this candle prices should have continued the upward momentum. But what happened, prices formed a range. Okay, prices are consolidating. Now look at the volumes in the consolidation phase. Very important. In consolidation phase, the selling legs have increase in volume. So we can say that after this strong buying pressure, if buyers were very strong, then they should have pushed the prices aggressively towards the upside. But what is happening now, in this consolidation phase, sellers are dominating. Okay, the buyers have lost control at this price areas. That's why buyers were trying, but they are not that aggressive and strong enough to pull the prices towards the upside. So this is another important, very important clue. Now see these two candles, we have increase in volume, but the prices haven't moved up that much. So what is this indicating? After selling pressure, good selling pressure in this consolidation phase, we are seeing increase in volume, but prices haven't moved that much. Prices are just consolidating at this price areas. Still they are consolidating. So if this was all buying pressure, then we should have seen a very strong buying momentum after a period of good consolidation, and also we are in a very strong uptrend. So this was the very important point for the buyers, that now the sellers to trap them. See, they were defending these levels very aggressively. So with increase in volume, buyers should have broken this level and trapped the sellers and pushed the prices towards the upside. But what happened? With increase in volume also, we are seeing very narrow spreads. So this is also an indication that supply is still strong in the markets. And then what happened? Prices opened here, then buyers pushed the prices towards the upside. But what happened? If they were very strong, now see, these levels were already tested. So when prices broke above this price area, buyers should have taken control and pushed the prices aggressively towards the upside. But what happened? Again, sellers defended this level very aggressively and pushed the prices towards the downside and broke the important support zones. And see, we are seeing a surge in volume and prices have moved towards the downside. So we will add market structure, and then we will look for potential entry and exits in the markets. So now first let's analyze price bars and the subsequent volumes. Now what happened? See, after breaking these levels, prices moved down sharply towards the downside. But then again sellers lost momentum and there is a decrease in volume. Again buyers push the prices aggressively towards the upside with increase in volume. Okay, now again see the kind of volume that is coming in the markets. Similar to this candle, again we are seeing this type of candle at the same location with the same volume. Okay, so this is very important. Location same, candle size almost same, volumes also almost same. Now buyers had the greatest opportunity now to continue the upward momentum after breaking this important resistance zone. Okay, with surge in volume, we should expect that prices should continue the upward momentum after taking a small pullback. But what happened? Prices again pushed towards the downside. So we could say that this was again a exhaustion candle with exhaustion volume. Okay, then again see, when prices are coming down, volumes have decreased. Okay, now again prices now are continuously forming higher low formation. Okay, prices are continuously forming higher low formation, which is an indication that demand is very strong at this price areas. That's why sellers are trying, but there is not much pressure in the selling side to break the support level and continue the downward momentum. And see, there is a price and volume divergence here. Volumes have increased but prices are forming higher low formation. So if this was all selling pressure, then prices should have broken the last swing low and continued the downward momentum. But what is happening? Volumes have increased but prices are forming higher low formation, so which is also an indication that demand is very strong at this price areas. Okay, now again buyers tried, again sellers push the prices towards the downside. Again buyers tried, again sellers push the prices towards the downside. But what is happening? Every time sellers are trying to push the prices towards the downside, the volumes are going down. Okay, so this is an indication that in this consolidation phase, supply pressure is decreasing. There is a divergence in price and volume here, so which is also a very bullish sign. Prices continuously making higher low formation, and whenever sellers are trying to push the prices towards the downside, volumes are going down. So this is a very positive for the buying side. Now again, see here, there is again a divergence. See these two candles and see the increase in volume. Volumes have increased, but the spreads are very narrow. So if this was all supply pressure at these two candles, prices should have formed a very strong bearish candle and push the prices towards the downside. But with increase in volumes, prices are consolidating at very important point, higher levels. So this is also a very bullish sign in the markets. Now again, this candle with increase in volume broke a very important structural resistance zone after continuously higher low formation, and all the supply is being absorbed by the buyers, and then we see a sharp increase in volume and strong bullish candle closing at the highs. So this candle is indicating that bulls are now in full control in the markets. Remember that we are in a overall uptrend, okay, and sellers tried from here, but still they couldn't push the prices towards the downside. So this is an indication that all the supply is now absorbed and prices should now go towards the upside after a increase in volume and breaking this important resistance zone. So what happened after that? After breaking this important resistance zone, see there is an increase in volume with multiple rejection candles. Again sellers push the prices towards the downside. See, this selling leg have very high volumes, so which is not a good sign, because if buyers were very strong and it broke out of a very important consolidation range with increase in volume, the selling leg should have lower volumes, okay, and then prices should have continued towards the upside, and the subsequent buying leg should have increase in volume. But in this case, what is happening, sellers are coming in the markets at this price areas even after a strong breakout of a very good consolidation range. Now see the buying pressure and see the volume. Very weak buying pressure, and the volumes are also very low. See the strong selling leg and see the volume. Volumes are very high and selling pressure is also very strong. Now see the buying pressure, very weak buying, and there is a decrease in the buying pressure, and also there is a price volume divergence at this candles X, Y and Z. Why I have marked this? See, X with this kind of volume, prices have formed a spread like this. Then Y, volumes have increased but the spread have narrowed. So this is an indication that supply is coming in the markets. Then at Z, highest volume among these three volume bars, but the spread is even narrower than this candle. So these three volumes and these three candles are indicating that supply is very strong in the markets, because remember we broke out of a very important resistance zone. So expectation is after this pullback, prices should have moved towards the upside aggressively. But what is happening, the retracement leg have higher volume and the buying leg have lower volume, and also there is a price and volume divergence. Volumes in the buying leg have increased, but the spreads are getting narrower and narrower. So this is also an indication that supply is very strong than the demand side at this price areas. Okay, now see the strong selling pressure, increase in volume, So what is this indicating? That even after breaking out this important resistance zone, buyers were not strong enough to push the prices towards the upside, and it now broke towards the downside and moving down aggressively towards the downside. Strong selling leg, then pullback with lower volume. So buyers have totally given up at these price areas, and sellers have taken control and pushed the prices aggressively towards the downside. Okay, now we will add market structure and look for low risk high reward trade setups. See, here there was a very good selling opportunity with stop loss just above this resistance zone, and see the strong selling momentum after that, although selling pressure have reduced, but here we could have got at least 1:2 risk reward trade setup. Why we will sell here? Because after the strong buying momentum, we saw an exhaustion candle with huge volumes, no follow through buying, and selling legs have higher volumes, and there is a divergence in the price and volume, and most importantly, prices have moved up, breaking this important resistance zone, but still buyers were not that aggressive and strong enough to push the prices towards the downside. So this was a very important clue that sellers are still very strong at this price areas, and we could sell here, stop loss here, and see the huge downside movement after that. So this was the first trade setup. Secondly, increase in volume, strong buying candle but no follow through. Again sellers tried, low volume, high volume but higher low formation, so price and volume divergence, which is an indication that bulls are very strong, demand is very strong than the supply. Again sellers tried but no follow through, again sellers tried, no follow through, again sellers tried but higher low formation, selling pressure is very weak. Increase in volume, narrow spread, bullish sign that demand is very strong than the supply. Then what happened? Prices broke this important resistance zone after absorbing all the supply pressure. So we can enter here, stop loss here, and prices have moved up, but after seeing these two candles with increase in volume, see at P volumes are very high, and this is a clear cut rejection. Where this rejection is happening? At the important structural zones. Multiple rejection candles, shooting star and hanging man pattern is happening with increase in volume at resistance zone. So if we buy here, stop loss here, after seeing these two candles formed at the resistance zone, we should definitely put our stop loss to cost. Okay, because we are seeing a weakness in the markets with increase in volume at the structural level. Although prices broke out of an important resistance zone with increase in volume, but after this breakout, ideally we should have seen a weak pullback with very low volumes. Then we could have stayed in that particular trade. But what happened here? There are two rejection candles formed at an important structural resistance zone with increase in volume. So after seeing this, we should put our stop loss to cost. Then strong selling, weak buying, then price volume divergence, volumes have increased, spreads have narrowed, so this is an indication that supply is very strong. Then again prices broke this important support zone with increase in volume. So if you are an aggressive trader, you could short here, stop loss here, and see the huge downside momentum after that. But if you are a conservative trader, you should sell after breakout of this important trend line here with stop loss here for first targets of around here and next trade could have been around here, stop loss here, and see the huge downside momentum after that, because buyers are now already trapped at this price areas, and that's why we are seeing strong selling momentum with increase in volume coming in the markets. Okay, and next trade could have been around here with stop loss here, and see the huge downside momentum after that, because see, after this strong selling momentum with increase in volume, we are seeing a weak buying momentum. Strong selling momentum, weak buying momentum, decrease in volume. The buying lag or the retracement lag, the volumes have decreased. So here there is a bearish engulfing pattern formed at the resistance zone. This is very, very important. We are structured to lean behind, so we will enter here with stop loss here and see the huge downside momentum after that. Okay, so this is very, very important. These two candles are telling us that supply is very, very strong at this price areas, because the volumes are huge volumes. With huge volumes there is no follow through buying. So this is an indication that these two candles are potential exhaustion candles, because these are happening after a strong established uptrend, So after an established uptrend, if we see huge volumes with huge spreads, we could say that this could be a sign of a potential exhaustion in the markets. So if this was all buying pressure, there should have been follow through buying, but that is not the case in this both candles. So these are potentially exhaustion candles in the markets, and that's why there is a pullback after these candles. Okay, so I hope you got something very, very important learning from this video. If you find it useful, do like, share and subscribe, and also do comment down below if you have any queries related to this video. So see you in the next video. Until then, it's bye from my side. Take care everyone. Bye.